Hello everyone and welcome to the Quantpedia Explains Trading Strategies video series. Today we will discuss the revisiting trend reversal in Bitcoin.
Hello everybody, my name is Radovan Vojtko, I'm head of research and CEO at Quantpedia. My plan for today is to revisit the older article. So 2.5 years ago, at the beginning of 2022, we wrote an article called Trend Following and Mean Reversion in Bitcoin. It was an article mainly about how to trade cryptocurrencies, how we can use the trend effect in cryptos and how you can use the mean reversion effect in Bitcoin. But it was in 2022 and it was 2.5 years ago. I mean, if you want to read something or view, you can find a video also on the YouTube and you can find the article in our blog. Today is September 2024, so I mean 2.5 years is a lot of the time, so it may be a good time to revisit the old article and take a look at how does the strategy perform that we suggested in the older article, so we can have nice 2.5 year out of sample equity curve, and we can take a look at what was the performance and we can draw some conclusions out of sample performance. Of course, there were a lot of events in the past that had impact on Bitcoin price, like rising inflation rates, soft landing scenario in US economy, Bitcoin halving, and of course the ongoing war in Ukraine. So I mean, all of those events had some impact on the Bitcoin. I mean, from 2022 the Bitcoin had a very steep drawdown, and afterward there was a very strong recovery, and at the moment the Bitcoin price is around $58,000-$60,000. Let's do the analysis. So let's do the out-of-sample analysis. So once again, we used the data from the Gemini exchange. I mean, the reason why we use the Gemini exchange and not other data is because we can obtain the longest data period from the Gemini exchange, and I mean the price of the Bitcoin is nearly the same in all of the exchanges. So I mean the result of the analysis holds even when you trade on any other exchange. So we can have a data from October 9, 2015. The data sample ends in August 20, 2024. I mean, the previous sample ended in February 2022, so it's 2.5 years longer. The strategy is built from two parts. The first one is the strategy tries to buy Bitcoin in a new short-term highs. So when the Bitcoin creates a new maximum or new high, holds the Bitcoin for 1 day, and then checks whether there is a new high once again. So that's the first leg of the strategy. The second leg of the strategy is to buy on the minimum. So we are trying to buy the short-term weakness. So we buy the Bitcoin when the price is on short-term 10, 20, 30-day minimum. We hold for the 1 day. And in case there is once again the minimum, the next day we hold for 1 day longer, etc. If the Bitcoin is over the minimum price, we exit the position. The strategy has two main legs, the trend following part and the mean reversion part. So here is the review of the whole sample. So what is the performance of the strategies over the different periods, so over 10, 20, 30, 40 or 50-day periods. And here is the result for the whole sample, so from 2015 until 2024. As we can see, I'm buying on the new high or buying on the local maximum, whether it's a 10-day, 20-day, or I don't know, for 50-day is profitable. We are able to remove the drawdowns that usually come up with investing in the cryptocurrencies. So when we invest in the cryptocurrencies, you can expect drawdowns like, I don't know, 70-80%. The maximum drawdown of buying at the new high is around minus 25, minus 40%. So you have return around 40%. Return to volatility ratio is around 1.4. Buying at the maximum has significantly better return ratios than just buying the Bitcoin itself. The reason for that is because when you buy on the maximum and hold for a short period of time, you are of course not getting all of the return you can get from holding the Bitcoin itself, but you are also avoiding a lot of the drawdowns from the Bitcoin itself. So you are profitable, but with lower drawdowns. Or the other part of the strategy is buying at the minimum. So I mean, what you can see is that down to 2021-22, the strategy was nicely profitable. Afterward, we have plus or minus the flat period. So I mean, the resultant whole sample from 2015 until 2024, so 9-year performance is still the positive, but it's lower than buying at the maximum. So I mean, the performance between 8 and 20%, drawdown is around 40%. The strategy still has a positive return, but is not so profitable than buying at the new highs. I mean, Bitcoin is trending. Bitcoin or cryptocurrencies are more trend-like assets and they do not have so many reversals than they had in the past. The combined strategy from our previous article, the trend following mean reversion Bitcoin, was to buy the Bitcoin if it's at the 10-day maximum or if it's at the 10-day minimum and hold it for 1 day. So here is the whole sample performance, And the out of sample performance is a positive because, I mean, the sample ended in 2022, at the beginning of 2022. So we can see that we are close to new highs in the strategy. So, I mean, in overall, the strategies was performing positively. And, I mean, I would say really confident that it will probably work in the future. But let's take a look on the out of sample analysis. So here is a chart of the underlying market. So the Bitcoin price from February 4, 2022 until August 2024. As we can see, here is the price action that I mentioned at the beginning of the video. The Bitcoin price went a little up until around 50,000, then went straight down. Bitcoin minimum was probably around 15,000 at the end of year 2022. The main reason for the drawdown in the Bitcoin was rising inflation and the rising geopolitical stress due to the invasion of the Ukraine by Russia. If we take a look, what was the performance, out of sample performance of the strategy that buys on the maximum? So here we can see out of sample performance. So as we can see, for over 1.5 years, we were able to avoid drawdowns in the Bitcoin market. And then once the Bitcoin market started to rise up, we jumped on the bandwagon and profited from the rise in the price. The max strategy, or the strategy that buys on short-term high or short-term maximum 10, 20, 30 or 50 days, was profitable with a nice return to volatility ratios and significantly better than just holding the Bitcoin, in which case you had like 80 or 90% drawdown. You, by using the maximum strategy, you just realize drawdown around 15 to 20%, which is, I mean, really minimal. Okay, what was the out of sample performance of buying at the minimum? So, I mean, the reversal part of the strategy. I mean, here the results are mixed. At the end, the performance for all of the variants, it's plus or minus around 0 or slightly negative. There were not a lot of reversal opportunities for this strategy. So when you try to buy at the local minimum, 10, 20, 30, 40 or 50 day, and you tried to buy the Bitcoin, hold it for 1 day, you were not profitable. So I mean, this leg of the strategy was not very profitable. The question is how the strategy will look like in the next 2.5 or 3 years. So will the buying short-term stress at the Bitcoin minimum continue to disappoint in the future? I mean, that's the hard question to answer. However, based on the out of sample test, we would probably put more faith into the max strategy, so buying the new short-term highs. And I mean, this strategy definitely retained the effectiveness over the last 2.5 years, and I mean, it protected a portfolio very nicely. So, and you were able to gain from the run-up in Bitcoin prices. The second part of the article on our blog, we checked the maximum strategy and the minimum strategy, and we checked what is the seasonality of the strategy. We had a hypothesis that Bitcoin can be strongly seasonal. The reason for that is because it's open 24/7, so the Bitcoin market is open every day over the week. But actually, I mean, over the weekend people do not trade so much or so often, so there can be like interesting seasonality in the strategy and maybe higher performance over the weekend compared to the rest of the week. That was our idea, that was our hypothesis, and we wanted to check whether our hypothesis hold or, I mean, is not true. We ran the seasonality test, and here are the results. So firstly, the seasonality in the max strategy. So what is the best day to buy the maximum in Bitcoin? So we check the seasonality, and here are the results. Here is the Monday, here is the Tuesday, here is the Wednesday. Wednesday looks very, very nice. So when you buy the maximum from the Tuesday to Wednesday and you hold the Bitcoin during the Wednesday, here is the performance, and we can see that it has even higher performance and lower drawdowns than just the holding the maximum every day. Here we have a Thursday, here we have Friday, Saturday, and Sunday. The Sunday is also interesting. So here we can see that the performance of the Sunday is in line with the performance over the Wednesday. I mean, those 2 days are the best for trend follower who tries to buy the new high. As I said before, our initial hypothesis was that there will be weekend effect. So Friday, Saturday, Sunday, and maybe Monday would exhibit the better performance. I mean, there is definitely interesting performance over the Sunday. It may indicate the presence of the weekend effect, but other days over the weekend and other weekdays doesn't help us a lot, because the rising equity curve for the Wednesday doesn't relate to the weekend effect at all. It suggests that the strong performance on just these 2 days, Wednesday and Sunday, may just be a coincidence. So therefore our study of seasonality for the max effect strategy remains inconclusive. So we do not have a strong conclusion. The next part was study of the seasonality in the mean strategy. So I mean the reversal part of the strategy, buying on the local minimum. So here we have a performance chart over the Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday. Here the best performance is in the Saturday and in the Tuesday. I mean, those are the 2 days that are the most profitable, but once again we are of the opinion that the seasonality effect is not present even in the min or minimum strategy, and the highly performing days are not consecutive. So I mean, this occurrence is probably just a random coincidence as well. So what is the conclusion? Conclusion is that I will probably not play the seasonality in the max strategy, also in the min strategy. And I mean, in the future, I will probably employ just the max strategy. So I will just check if the Bitcoin is at current short-term high. If it's in the current short-term high, I will buy the Bitcoin for a short period of time, 1, 2, or 3 days. And I will check periodically whether it's still on the new high. And if the Bitcoin stops making new highs, I will get out of the Bitcoin market and I will try to avoid the drawdowns that will sooner or later once again come to the Bitcoin. That's my recommendation. I hope that you like this analysis. I hope that you like this video. In case so, please give us the like and please follow our YouTube channel, or you can follow us on all of the other social channels. And if you would like to read the whole article, feel free to visit our blog. Thank you very much.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.